because it's giving benefit to the enterprises, the consumers, the governments, the researchers, and many other constituents relatively immediately, right? So people can see tangible value. That, I think, is the big difference. Automating simple enterprise logic and hoping that you'll get the multiples is going to be difficult more and more in the future, unless you really add significant quote-unquote AI value to the customer and to the customer. This phenomenal amount of effort from various forms of government and in terms of capability, funding, painting sectors, mission modes, all of that stuff. I still feel our research ecosystem has not caught up.
Welcome back to Chai and Chips. Over the past 24 months or so, we have seen a massive creation of startups in almost every domain owing to AI. But not all companies are created equal. Some of these startups are built on existing models and platforms, while others are trying to build on deeper, more defensible technologies. Now, when you look at India, which is constrained on talent, infrastructure, and capital, it's not just what you build, but more about what you can build durably. And that's the conversation we are going to have today, where I'm going to explore what must hold true for AI-driven deep tech companies to get successfully built and funded out of India. To have that conversation, I have with us today Narendra Bhandari, who is the general partner at C Fund, an early-stage venture fund. He has been an operator for a very long period of time in a variety of tech businesses, including semiconductors. And of late, at C Fund, he's looking at AI companies and deep tech companies from an India point of view. So with that, welcome to the show. Welcome to Chai and Chips, Narendra.
Thank you, Prakash.
It will be a great conversation, I'm sure.
Look forward to it.
So let me start with just the lay of the land according to you, right? Your vantage point. And I want to start with, you've worked in US. You have seen technology cycles both there as well as in India. And when you look at the AI and deep tech wave getting enabled today, in the past couple of years or so, what do you think is fundamentally different?
It's definitely different. Now, the question is, what is fundamentally different and why is it likely to last rather than probably die down as a hype cycle? Right? You made the point earlier that we've seen a few cycles. I've certainly seen a few longer cycles than probably you have, but many of the past cycles were driven for either value to the enterprises. Some of them were value to enterprises and consumers, and some of them purely to consumers, right? The cell phone industry is an example of a wave which just created, very significant value from where it took off, from just mobile devices, productivity devices, to being extremely valuable devices for everybody. Many of the enterprise scenarios, let's pick on blockchain as an example, right? Several years ago, it became a centerpiece of discussion everywhere.
It was hot.
Things were going to change, money was flowing in. But the enterprise value of that also was probably there, but not visible, not clear to the boards. And, it took a lot of effort, for an example, to make it work for, some folks, and then majority of the people couldn't figure out exactly what to do with it. With AI, you're seeing both. You're seeing the average consumer sitting in a tier 4 town, anywhere in the world, being able to do things, which is not just accessing information, but being able to build stuff, create stuff, research stuff, plan stuff. And on the other end, a CEO or a business head is able to, basically look at reports, and instead of just relying on his or her team's summary to tell them what, he could feed it into their internal model and start to understand what's really the story, or his or her view of analysis of the story. So to your point about, is this fundamentally different? I think, yeah, because it's giving benefit to the enterprises, the consumers, the governments, the researchers, and many other constituents relatively immediately, right? So people can see tangible value. That, I think, is the big difference.
Yeah, it's interesting you say that, because I was taking an AI class. It's multiple weeks, and just last weekend, one of the founders in India is into AI services, and he came and gave a talk on how they're using AI, which is exactly what you're referring to. They have now automated the submission of proposals, which used to take weeks. Now it's like a few hours.
Yeah.
It's just stunning on the impact organizations can actually deliver within just by use of the model. There is a part which is durable in that segment of companies. And there's a part that is either opportunistic or just experimentation that may just fall by the wayside. How do you look at it from an India context?
So you're referring to the number of new efforts and startups and ventures of different forms coming up. Yeah.
Correct. Especially in AI.
Especially in AI, yeah. Every tech revolution will have a whole bunch of people who will take that centerpiece of technology and try to tinker with it, create value around it, build wrappers around it, build services around it, and stuff like that. I see it no differently even now, right? Where lots and lots of people are trying to do different things with AI. We'll come to the durable part in a minute, right? The use cases are extremely varied in terms of the end of the spectrum, right? On one hand, you have somebody who's saying, I just don't know English and I want to be able to apply for a job. I can speak my local language relatively well, and I just need help in writing my email in English better to apply for a job. Right? Very basic, very simple, basic, probably using their phone. It's a very livelihood thing for that individual, and you're able to do it. At the other extreme probably is medical researcher looking at thousands of patients of data and trying to model out over the next 3 to 5 years, what is your next GLP scenario going to look like, or what is the next oncology treatment going to look like, or, what are the cases of cervical cancer which we can probably predict, detect, stop, out there things. Now you could argue both are using AI. Now you could argue the individual who's writing the email is essentially using a wrapper technology of somebody else's model and getting some basic transliteration done. And the other end of the extreme is just burning down a power plant and using a lot of compute and a lot of... neither is irrelevant, right? I mean, both are useful to that constituent. So when this question comes up that how many of these wrappers will survive, how many of these, the contrarian view I have is that if they can figure out a population or a constituent set which values their tech, however simplistic or low tech or whatever it may be, so be it. If you can create a model around it. The other end of the spectrum, of course, enterprises, medical researchers, hospitals, security companies, we can keep going on. They'll see a lot of value and they will push the edge on the tech and use the best of the best scenarios, right? So you asked another word, you said another word which is on durable tech, right, or durable value. The fundamental notion around durability hasn't changed, whether it's AI or blockchain or cell phones or whatever tech which revolutions we may have seen. Durability is around when a customer is willing to pay you money, right? And you can take that money consistently, either with the same customer or have lots of customers pay you for whatever, with the right kind of financial health, margins and all of that stuff, capital and all of that stuff. So AI is no different as far as durability is concerned, right? You're going to have to figure out a way that somebody pays you money, right? And however low tech you are, like we talked about, or however advanced you are, if you're not able to convince, it's as basic as that. You've sold enough, we've sold enough. If you can't convince the customer to give you money for it consistently, you've lost your durability. Tech may not be the differentiator, may not be, right? Or simply because of the widespread usage of, this core AI technology across cultures, across continents, across age groups, across constituents, across economic, strata. You'll find somebody who can derive value at different layers of the stack and different layers of the society, different segments of the society, and so on. But yeah, to answer the core question, durability is going to be about finding somebody who will continue to pay, right? And you can make that money with decent financial health. And maybe we'll talk about all the capital and everything else which is going.
Yeah. With that lens, when you look at it, the two extreme scenarios you mentioned, the most basic tech to the most advanced tech, the ability to deliver value is to get the customer to pay. Is there anything you believe AI-driven startups distinguish themselves in terms of creating that durable value?
So if you look at the stack of AI today, right, at the core or at the base, just from a financial perspective, is the investment around infrastructure. I think enough is being written, has been written, probably will be continued to be written. And this is not a tech topic anymore. It's not an energy topic anymore. It's not a money topic anymore. It's become a community topic, right? Where residents are beginning to choose whether they want to have a piece of AI infrastructure close to them or not, right? It's come down to that level of impact to the society one way or the other, depending on how you look at it. So at the core of it is infrastructure, right? Infrastructure, power, water, land, CPUs, GPUs, all that stuff, memory, interconnect, all that stuff. Then there is the models itself, right? Your number of tokens. Today we're all counting tokens. 5 years from now, maybe we're counting something else, but the overall software layer in itself, right? And then there is a layer above that, which is your business value. It could be verticalized, could be sandboxed into your company, could be sandboxed to your country, could be open, could be images. So I think to your question, the startups will have to figure out, where do I want to play, right? It's going to be hard for a lot of people to play at the infrastructure layer. It's going to be hard. I wouldn't say harder, but it's going to be a fast race if you want to play in the model layer, right? The jury is still out on that, right? Whether SLMs, very small LLMs, all those layers, all those there's different conversations around that, whether we really have room for lots of small players or, if you're going to research something, would you want a subset of 100 papers or would you want a subset of the infinite number of papers? Yeah, right? Whereas, if I'm just doing language translation and I know my constituents are largely 5 languages, do I want the models to take care of all the languages, all the dialects, everything ever spoken in the world? You could argue, right? So on the software layer, you can probably find areas where you might be valuable to your customers. Then the layer above that is where the application layer is. There's lots of room for you to play. And coming back to the durability question, if you can play in that and get your customers to give you money, go for it. Assuming you can pay the guys below in the layers sufficiently and use it. So
I'll come back to the layers and how we could compete as a country in some of them or all of them. I keep thinking about is just the mismatch in the speed and time. So let me give you a little more context. On one end, you have models that are accelerating. It doubles the capability supposedly once every 7 months, which is faster than Moore's law. And then the other end of the spectrum is the core technology parts. I was listening to Waymo's CEO talk about how it's been like close to a 20-year journey on autonomy in cars. So as a deep tech venture capitalist, how do you reconcile the two? Because at one end, the models are operating so fast on the software side, but the core technology takes long to build.
It's actually physics. It comes down to physics as far as the length of time is concerned. Physics and chemistry to some extent, but actually, physics and chemistry. Now, we have a portfolio company called Caligo Tech, right? They're in the business of building chips, and they've built their early chips. We have another portfolio company called C Electric. They design and help build motor controllers, for various EV infrastructure. We have another portfolio company called Take Me to Space, and they design infrastructure which helps build you satellites faster. And now they're going into orbital compute, right? Now, why is it physics and chemistry, right? So if you're going to build chips, there is an aspect of time. It used to be maybe many, many years ago, 3 years, 4 years design cycle. It came down to maybe 2 years. It's probably still 1 year-ish plus with any reasonable new design. And there's an aspect of physics, there's an aspect of math, there's an aspect of just basic science which we have not crossed over to shorten that. In software, pure software, maybe those physics and chemistry are not constraints
Doesn't
in any
apply.
deep way, right?
Yeah.
It's just, there. And how fast you're able to churn, how fast are you able to absorb data to be able to train your models and stuff like that. That's probably access and absorb data is probably the time constraint, assuming you've got your algorithm right. So as investors, you start to map out and say, for Take Me to Space to become wildly successful, for example, his physics are very simple. I need rocket launch capacity. I can build satellite infrastructure quickly. I need to have lots of rockets going up in space and putting my stuff and other guys' stuff in space. So for him, physics and chemistry and everything else are just limiters.
Correct. Guardrails.
Yeah, unless he's very good friends with Elon Musk and can get a ride on, one of the rockets every week, right? Which we recommend to him. But anyway, so for him, launch capacity, the physics around it, or of course, eventually the finances around it, is a limiter. So to your question of when we invest in time versus speed, there are certain technologies when we look at whether it's semiconductors or space tech or advanced space tech infra or quantum sciences. There are fundamental science steps. I wouldn't call it limitations, science steps which you have to tame, understand, design around it, and then move forward. And then the physical stuff. I mean, we have another company called Gen Robotics from our fund one, right? They build robotics infrastructure which goes into sewers and cleans sewers.
Very cool.
Right? And they've been winning business in different cities and recently in Singapore. And it's extremely high-tech piece of equipment, phenomenal piece of equipment, completely robotics infrastructure built out of India, and we'll talk more about it. Guys, sitting in Kerala, and Vimal and team doing a fantastic job, and they've not just figured out how to build a nice software, hardware, infrastructure, actuators, memory, camera, visual recognition, all sort of integrated. They've also innovated on the business model. They're doing as services, they're selling it as capital equipment, they've got a decent network of resellers. So physics plays for them, right? I mean, just even after they design the robots, putting together robots take time. Putting together robots needs a factory. Getting the motor controllers, the batteries, the cameras to work in a extremely hostile environment where all the garbage goes in, physics plays. So I'm giving you these examples to show that where we know that these physical, chemical elements have to be tamed, it's going to take time. So we factor that in when we look at investments. Where it is a pure software play, there are two things which happened. One is you obviously expect the startups to do it at a much faster pace, but then there's another deeper element to that, which is your competition is much wider. Because the barriers to entry to building that kind of software solutions, there's no capital requirement, there's no hardware requirement. You just get a bunch of guys, start coding, and you can do it. So we look at the lens we look at in pure software offerings is slightly different, because you have to figure out, well, you have to assume there's a competitor. You have to just assume that somebody is building something like this, and you have to assume that somebody potentially can build it faster than you, better than you, cheaper than you maybe. So there again, the time-space element is calculations very different. It's like, can this guy make it in the next 6-9 months, get customers and get going and build momentum? So in the AI space, back to your question about time and speed, the speed at which some of the model guys are moving was similar to the speed I remember when the cloud wars had just started, right? For many years, one of the cloud players was dominant, and our friends at AWS did a fantastic job setting up their industry and bringing it to a certain level. And then Microsoft came in, Google came in, and the Chinese players didn't quite make it globally, but they also did a pretty decent job. It was like every 3 months was a lap, right? On certain features, somebody is ahead, and then somebody else is ahead on certain features, and somebody else is figured out. So you would watch that, and every 6 months you could say somebody else, and they're moving very fast in terms of features. And there again, there's a capital play, right? You know that.
Yes.
Similarly, the model guys are in a similar space right now, right? There's a capital infrastructure play, and every quarter, right, things are dynamically changing.
Yeah.
Right? Mythos, if you've
came out of nowhere,
seen and read about it, it's just fascinating, right? I mean, the code generation tools which everybody has come up with, fascinating, right? I mean, the pace at which it's going, you can't keep up. You cannot keep up, right? I mean, you cannot keep up to understand everything. And as a potential investor, we're like, should we hold our breath, get into this, or will somebody else come and get it faster? So it's a challenge to catch up with that pace. But on the layers above, you can invest because you're building to somebody's business value. You're solving somebody's business problem.
So in that situation, the great context that you painted, you think the deep tech investing becomes more risky in such an AI world or AI-led world, or more valuable?
See, I'm a Marwadi by birth. Sorry, but it's all about the size of the pie, right? Just go fundamentally with the size of the pie. Tech, deep tech, semiconductor, software, it's all, I mean, just if you oversimplify.
And size of the pie, you're talking TAM.
TAM, how much value is being created, right? Not in the ecosystem, but in the consumer's mind to pay for it. 2 years ago, none of the 10 million, 50 million people thought that they're going to pay $20 a month for some kind of subscription to one of these, I call them AI assistants, right? Suddenly this thing has been created where you've grabbed a share of wallet for which nobody had budgeted. And we talked about the value from one extreme to the other extreme.
Yeah.
Every enterprise said, okay, we've got infrastructure budget, we've got cloud budget. The CIO and the CFO are having conversations, which is how much of an AI budget which we need to have, right? And clearly, it's a zero-sum game from the CFO's perspective. He or she knows their revenue projections. CIO is chewing his brains, the board's chewing his brains, like what AI investments we're doing. And they're going to have to figure out from within the balance sheet how much to allocate for AI spending. So the pie has grown.
So everybody can, or more people can play.
A lot more people can play. A lot more. Right? At the infrastructure layer, it's going to be complicated. Right? We'll talk more about it. But at the services layer, at the value layer, a lot more people can play in it. Right? So to your question, is it more risky to invest in deep tech? You certainly need to understand whether the tech you're looking at is maybe too narrow or
narrow in terms of time or narrow in terms of
usage, applicability. Because what happens is the time and the physics chemistry is very critical. If it's extremely narrow and it has a time angle for it to become relevant, then you're in a very difficult scenario, right? Because somebody is going to come up with something better.
Yeah, agreed.
So you're going to have to pick areas which has a slightly wider applicability. Not too wide, but slightly wider applicability. And then so that if somebody in one usage segment got you, you're at least
able to expand
in one or two other segments rather than defocusing yourself, but at least having some options to go. So let's talk about that example, right? Let's say I was building some extremely sharp models to help the investing industry in, let's say, financial services, right? And you've narrowed down your model only to, let's say, certain kind of stock class and investing and stuff like that in public markets and stuff. It's great. It's big money. But then lots of people want to do it. And then you know, would you, let's say, look at other instruments also? The linkage of public market with, let's say, FNO, or linkage with public market, to currency, or so, a little bit of, hedging. Then when we look at those kind of companies, like, okay, this guy's been able to go. And then I'm sure you've heard the word pivoting, right? Mm-hmm. So at least in the context of the startups and the VC industry, there's an option or there's a chance that these guys can pivot and get into something else, because you'll have to assume that somebody's gonna come in and do it faster. And then there's a geopolitical context to this also, right? We can talk more about it, which is there something else which is, allowing you to have a longer runway because of the geopolitics context, because of some government policies and stuff.
Yeah, that's a good insight. And as it relates to the value that is getting created, you talked about value in the context of customers' propensity to pay, irrespective whether it's basic or advanced.
Yeah.
And there's a lot of debate on where value is actually going to accrue in the new world order, driven by AI, whether it's models, whether it's infrastructure below that, or whether it's applications, all, some. So how do you think about it?
Oh, a very deep, insightful answer on that.
You don't care?
I don't know.
Okay.
It's complicated. I know it's not the best way to answer the question, but we're still observing, right? Let's look at the stack. Core infrastructure is becoming extremely big boys play or a government play, right? You can be a service provider to that. You can help go build data centers, but you won't be able to finance them. Somebody else is giving you the money. You can be, and so by the way, big industry, you being able to help, pour the right kind of concrete, put up the right kind of buildings, put up the right kind of power lines, get the right kind of, there's a lot of business in that. But you're a services business. There's value in that, right? There's very high margin business to be able to go serve to the data center guys and help build out data centers. But I think your question is more around the context of the AI usage, that where the value is, not necessarily the services.
And how it
building.
evolves.
How it evolves, yeah. Okay, so let's come back to the layers, right? Core infrastructure, we understand it's going to be held up with a few set of players and government. Models, right now there's probably 5-7 large players or popular global players. We've got our own versions emerging, Sarvam's doing some very cool stuff to get started, at least in the India context. Got a fantastic leadership team there. Good set of investors, attention from the right kind of folks in the government. We probably need a lot more of that, at least from an Indian context.
Local momentum, you're saying, in those areas.
Yeah, right. If you look at the global context, if every country went on to build 20 Sarvams of their own, then your question becomes very interesting, which is, can they all survive? Right? Where is the value in that? Right? That's the part where I give you my deep, insightful answer. I don't know. It's gonna evolve. In the application layer is probably less riskier, right?
Less riskier because it's easier to build. The TAM is bigger, to your earlier point, or
TAM is bigger. It's definitely easier to build. It's riskier because competition can emerge very quickly.
yeah,
It's riskier because the model could do what you were doing,
and
and
shrink
you were
your
like,
business.
why do I even exist? Right? But I still say it's less riskier because the pie is very, very large and growing. And you could figure out a class of customers who are suitable to your services and still move forward. Is it a fantastic VC investable model? Is again a bit of a debate. Because ideally, if you're in that business, you should be able to get to cash flow very quickly and then just sort of scale.
And why do you think so? Whether it's VC fundable model or not?
Just cash flow. Right?
Short-term cash flow.
Yeah, if they do reasonably well, they'll be able to get pretty good cash flow. Then, it's a self-sustaining engine. You don't need multiple rounds of capital to be able to. I'm not saying it's not a model, but it's going to be interesting whether they'll be able to generate that much expansionist ideas to need more capital and then hence get the right valuations.
Understand. And there's one thesis I have on this and would love your opinion on is there are a bunch of frontier model companies globally, like you talked about. And there are smaller model companies which are emerging like Sarvam and other parts of the world as well. And how we access technology is almost always, even in the future, will remain unchanged. Either it will be devices or PCs. Or in the B2B context, devices, industrial devices. So the models, it's a fair argument to make that the size of the models could shrink in those areas. And you could have vertical specific small language models evolving. What's your point of view on that?
So, in your earlier question, you had asked me, how does this, go in the future? I probably didn't answer it completely. It is, if done right, the intelligence will have to be everywhere.
True.
Right? It can't just sit in the backend model.
Yeah.
We go back to our library example. When you're doing research, you want to research 100 papers or you want to research everything across the globe, right? You want to research what is available in the country or you want to research everything across the globe, right? Patent office problem, right? Compute is going to be everywhere, is a belief I've had for a very long time.
And it's proven
And we continue to invest with that thought process, right? Hopefully, we'll see how that shapes up more and more. But compute doesn't go away. And compute at different layers, our bet is that that's only going to increase, right? You just have to be in any room, in any office building, anywhere in the world, and just look around the room and you'll see People like us look silicon,
Yeah.
silicon, right? So compute is there everywhere. Now, there's fixed function compute, which is like fixed function silicon, which is like a power regulator.
Yeah.
Just regulates power. Doesn't need anything more than that.
Yeah. In simple terms, it's a switch.
It's a switch, right? You build some fancy stuff in it, do some interesting silicon in it, but it's doing a switch and it protects everything else and regular. But then next to the power regulator is another piece of compute which makes a lot of decisions, right? Reduce temperature, increase temperature, bad guy, person of interest in a camera, hazardous environment, all kinds of decisions it's taking. Or in a Tesla FSD type environment, keeping you safe on a road which has multiple variable elements. So you will need a lot of intelligence in the car, even if it's not connected to the internet, even if it's not connected to the base model, to be able to get home. Like in simple terms, a very simplistic example. You're in a car, power outages around you, network drops off, satellite, bad weather. Your car can't stop and say, listen, I can't access the internet, so we're going to hang here for a while, right? Or I don't know how to make decisions. You're going to have to make decisions and keep moving, right? So all or enough, if not all the intelligence required to get you home safely has to be inside that car, right? Inside that silicon and the systems around it. Similarly, you'll see this in industrial robotics. And I'm not saying you don't need to connect this to the core model or the factory model, but you will need to push out more and more pieces of, and we've been talking about edge IoT for a very long time. Now, the AI models are going to sit on top of it. The benefit of all talking of edge IoT is we moved more and more compute to the edges, right? Now you have the ability to put more smarter models on top of it. So to your question about foundational models versus smaller models and maybe how that evolution happens, instead of referring to any of those terms, all I will say is compute and intelligence will get further and further distributed at all elements of the stack, in all layers of your enterprise. The other point you made earlier was how we access the models, right? You mentioned phones and you potentially mentioned PCs. I would say much more than that, right? A lot of it is going to become ambient, right? Maybe you have a fancy watch, which is making a lot of, decisions. There's a meme I saw a few years ago, which kind of always reminds me of how tech can do this, right? It's like, this may sound a little wife joke, but I'll say it anyway. You walk inside your house and your home intelligence system says, I've ordered flowers on your behalf, right? And the husband goes, why? Says, well, based on the conversation you had in the car with your spouse, I figured you'd need them. And I went online and this particular store had $5 off on the flowers. And I know the likes and dislikes of your partner. So those should be arriving about half an hour before your partner is scheduled to get home. This ambient intelligence.
It's a brilliant assistant, I must say.
Right. So it's got intelligence about you, your partner, your home, your e-commerce, your car, your schedules and the local suppliers and God knows whatever else is built into it, right? So that kind of intelligence is going to be everywhere. Whether we like it or not, there's a privacy problem to it. Separate discussion. But to your question, intelligence is going to be distributed deeply in many different parts. And to your question, whether we call them small models, large models, or the terminology changes in the future, but essentially intelligence is going to be everywhere.
And what do you think would be defensibility in that world? Is it going to be a function of, again, customers' propensity to pay for the value you deliver or something else?
I still believe it's so wide. To my earlier example, you have an opportunity to survive at various stages, various segments, various sizes. I don't think, the betting table is closed yet, right? There's
People are still placing
so
there.
many bets you can place. There's so much opportunity that you're going to be able to place on both sides, not just from the investor's side, but also from the innovator's side, right? The innovators still believe there's so many more ideas. So defensibility is going to be a problem when we start plateauing on the usage. I don't see that any time in the near horizon.
So you feel we are at a very early stage, and I kind of agree with you. There's so much yet to happen.
Yeah, I mean, it sounds overly optimistic, but it's just basic usages which these tools are able to offer. That I'm not too worried about defensibility. I'm more worried about, can you execute? Can you go win customers? Market exists, or markets existing and getting created and expanding. Just execute.
Well said. So that's a good break and time for some speed round questions, Narendra.
Oh my God.
I think it'll be a bit of fun and a bit of your patch of VC investing area as well. Okay. So the first one, more common in pitches, we are the first or we are the best?
Is it impolite to say both? But
You can.
no. I mean, obviously binary answers, but we probably end up seeing we are the first more often.
Which one do you think is more dangerous? A beautiful pitch deck or a confident founder?
Beautiful pitch deck.
Okay.
More dangerous.
One phrase that instantly makes you suspicious in a pitch.
We've got some very deep technology. Sure.
If you had to delete one slide from every pitch deck forever, which one goes?
Don't show me revenue projections beyond 3 years.
Yeah,
2 years, good enough. 3, maybe. After that, thank you, delete the slide. Next.
there's always a hockey stick.
Oh yeah,
Beyond.
Sure.
Next one. If AI showed up as an intern in your world tomorrow, what's the first task you would trust it with? And what's the one task you would never give it?
Okay. Research. I would trust it. Just go do lots and lots of research for whatever else. For whatever, right? Personal life, as we talked about, work, research, interests, everything. What would I not give it? I don't think I want my AI intern to write my speech.
Yeah, fair point. It doesn't.
I'd probably say what I want to say from my heart and from my brain, however convoluted it may be or however unresearched it may sound.
Yeah.
But
It's authentic.
it's you. So,
Yeah. Great answer. Which one is more painful? Missing a great startup or backing the wrong one?
missing. Anti-portfolio.
Within the limits of confidentiality, any experience on why it happened?
There's no clear answer to this, but sometimes it's just your own ability to do enough research. Bias is not a negative word. Obviously, we all work off of biases, but sometimes and we're a deep tech investor. The other reason why it becomes an anti-portfolio sometimes is you cannot be an expert in all the technologies.
Yeah, true.
Right? There's so much going on. And many times we can't even find the right experts in all the technologies. Right?
Yeah.
So you go with the folks whom you know, with the level of confidence you have, and then the limited knowledge you may have, and go with that, because some really cool stuff shows up and we're like, whom do we talk about this? Right? So that becomes sometimes an anti-boost, like, crap, maybe we should have done that, but anyway.
Yeah. And in deep tech, the losses can be really stark. With the benefit of hindsight. Nobody knows whether the technology would just rocket.
So a little bit about, I'll give you 30 seconds of the background of how we came to this point, right? If you look at C Fund's portfolio today, 60-70% of the portfolios got a strong hardware software element. Right? The conscious call, about maybe a year ago, year and a half ago, was maybe even 2 years ago, was we've got to stick to that thesis. We're going to do less and less of the very typical enterprise logic automation, which was loosely defined as SaaS. I don't agree with the word SaaS is not important, but just automating simple enterprise logic and hoping that you'll get the multiples is going to be difficult more and more in the future, unless you really add significant quote unquote AI value to the customer. So we took a call and we, to the point about, we said, there are certain things which we're going to not do, even within deep tech, deep tech, right? I mean, we don't do consumer and stuff, D2C brands anyway. Even within deep tech, some of the things we just don't understand, so probably stay away from it.
Yeah. So Warren Buffett's philosophy, saying what you don't understand, you don't invest in.
Yeah.
Last one, if you could invest in one type of founder, optimist or skeptic, who do you pick and why?
Optimist. Optimist, hopefully, who shows an ability to execute. Because even if they're wrong, and they have the ability to execute, with optimism, there's a chance they could pivot and move towards a meaningful venture. A skeptic is important as a balance in the team, but the core founder being a skeptic can become a problem because you're constantly worried about something.
Yeah. A limiter.
You're always looking for the limitations rather than the opportunity. So bet on the optimist. Can't be a foolish optimist sometimes, which I call myself, but somebody who can execute also. So
yeah, it takes a balance. Agree. Yeah. So getting back, you painted the broad brush picture on the state of the union, on how the companies are evolving, where the value might reside, what kind of stuff might change in the future, right? What I wanted to double click now on was some of the constraints around capital infrastructure as it relates to India. And before we go there, I wanted to ask you, what do you think must hold true for AI-driven deep tech companies to build core technology in India versus just simply applications?
So, two questions as I see it, right? I don't think the verdict is completely out on your question about value or where the value will be in the stack. I have this notion of, the whole nation is rallying around a cry around Atmanirbharta, right? Now, from a capitalist perspective, what does it mean? Or from an economist perspective, what does it mean? You're essentially being able to, my simple definition, is control your supply chain and economics around it. Not because you don't like a supplier, but because you want to be able to bring the value back home and create jobs around it. Right? Again, an optimist view rather than a political view of things. So that's the way I look at Atmanirbharta or self-sufficiency. And we need Atmanirbharta not because it's the politically the right thing to do, or it's because our population. We need to be able to create valuable industries in India. We're a consumer, a very large consumer. So if we're going to be a very large consumer, we might as well be able to produce some of that stuff here also, so that the value, can grow. Enough has been said around it, enough has been written around it. But I look at this from a context of technology. We don't need to be self-sufficient in everything, right? Or we can work on higher value in the stack, and some elements of the stack can be sourced from maybe 1 or 2 or 3 different people locally or globally, and you can still build a stack. Now, abstract notion, but let's bring it down to what you asked for in AI, right? Do we need to build all of the compute silicon infrastructure in India? Probably not. You can build some innovative elements. You can build some innovative pieces of silicon. You can build some very cool compute, which can, and innovative could mean more efficient also, right? You could build something which is 30-40% more power efficient. And every watt saved in a data center goes a long way. So you could do those kind of solutions. But other than that, if you're not able to, at least go focus on the higher values of the stack. Now, to your question about what do we need to build or how much do we need to build, and we can talk about the constraints later, but what do we... To start with, I think it's better off picking the problems which are local, right?
India specific.
Right. Language was an easy one, right? Some folks have picked that because that's pretty basic. If you're not able to communicate, then there's no value in having intelligence inside, right? If you know directions to how to get to the best Italy joint, and you're telling this to me in Kannada, and I don't understand Kannada, there's no point of that knowledge, right? Because we're not communicating. So language becomes very important. So some folks are going off and building the language models. Then there could be a health angle which we should definitely look at, right? We're different. Our genes are different. The global medical models may or may not be relevant to many of us. Our air quality levels are different compared to many parts of the world. The impact of what that has on us is very different. So I would look at many of the AI companies coming out of India to start to say, what can we solve here? Now you could argue, right? And I was talking to somebody in Hong Kong a few days ago, which is like, hey, do we see enough companies which can compete at a global level from India? So it's an interesting debate where should we even talk of India market, or should we get these guys to start building for the globe and India also as a market which will pay? Mixed opinions on that, right? Some people would argue just sell what you can here and then you can figure out how to get to the globe. Or some of the larger investors of different types will say, India is fine, but sell to the globe and then
come back.
You could argue both ways depending on what problem you're solving. So to your question, I think many of the AI founders should start think of back to the durability point, which is, am I going to be able to sell it to somebody who will pay me a reasonable, financially healthy dollar and scale with it? If it happens to be local, so be it. And if it makes it easy based on your cost structure and metrics to be able to sell locally and then grow overseas, go for it. It was not very popular even 5 years ago with investors, because investors were like, there's no money here, it should always go global and then maybe come back. I would say the market is picking up here.
So you think that part has changed? Building for India is definitely more attractive now versus
build architecture which can scale globally, right? But would you put sales teams in 3 countries on day one? Probably not.
Unlikely.
Right? Because your cost structure is not going to work out. So as a product, you should have global tech, global quality, global structure, global security, global level design quality, right? All that stuff. But as a go-to-market, as a vertical knowledge, as a domain-specific stuff in your product, you pick a few markets, pick a market and then go after it. Yeah. So that then your scalability across the globe becomes very quick.
And in an attempt to do that, you think the startups here are constrained in terms of capital, data, compute?
I don't think they're constrained by any of those. May not be a very popular opinion, but capital is coming in, right? We have Sidby, who did 10,000 crores of fund one, which they invested into, AIFs who invested into startups over the last several years. We have RDIF, which is going to, start allocating money to deserving funds pretty soon. We have SIDBI doing the second level fund of funds. We have several state governments who have fund of funds. We have, SRIs and NABARDs, so many institutions who are, in Karnataka, we have, probably 5 or 6 rounds of investing which has gone into tech companies as an equity investor. You have so many opportunities of grants for people to go work. It's a lot of hard work because you have to work through bureaucracy and stuff like that, but still, so much opportunity is there for you to be able to tinker, and build capital, build your early product and everything. There was a bit of a challenge in mid-stage capital, right? Growth stage capital, Series B, A, B, the range beyond.
To scale.
It was definitely an issue probably 3-4 years ago. It is getting better, I think. We'll see. Data will say, but there is clearly a thought process behind how to help that stage companies and get them to grow. So I wouldn't paint the picture that capital is a problem. What was the other two you mentioned?
Just the compute infrastructure, data.
Oh, data, we are certainly not. We are more data rich than any other country on the globe. Right? Any other country. I think.
And you think that data is accessible to startups who are building?
Amongst my sort of future, you ask, right? That's an area where I feel that is all the data being really beneficial to our local ecosystem? And the answer is clearly not. Right? I think we can do a lot better in that space. We are certainly data rich. We certainly have a lot of data. Everybody today, 1 billion odd people, is on their mobile devices, just feeding stuff into every aspect of their life. There's so much medical information available. There's so much financial information available. There's so much GST information available, which tells you how the economy, the nerves of the economy are visible for you in the form of data. And then you can figure out lots and lots of stuff from it. So we are rich. We are super rich in terms of data. It's just that we need to be able to, extract value out of it.
Understand.
Yeah. Sorry, the other one was compute, you said. We're getting there. Yes, okay. We were. There's more and more infrastructure getting built out locally. And it would be nice if we can get more of it, more accessible, more cost effective. But I think if enough people demonstrate that, yes, we're able to extract value out of it, it seems like the government's very, very open to putting more of it. The ministers have said it several times in public that, bring on the usages and we can add more capacity.
Understand. And in such an environment, there is a school of thought that is made public by several within or outside the industry in IT services that the country got built out of IT services innovation. Mm-hmm. And now when tools can build better code than human beings, the industry is staring down the barrel of a rapid disruption. Mm-hmm. So in such an environment, where do you think India holds the advantage? It has an edge.
See, it's good to go back to basics in some of these things, right? If we believe that the pie is growing, or the share of wallet of the CFO is going more and more into quote unquote AI. We saw the infrastructure to cloud transition. You saw how budgets got allocated sort of towards that. There it was a pure capital play, so the budgets got allocated to a small set of players across the world. Here it's different, right? And by the way, there also you had lots and lots of players who would help you migrate to the cloud and sort of make money, right? So there's AI infrastructure getting built out across the globe at a pace which is probably faster than any other tech infrastructure build out in the history that at least we know of. Right. Never in the history have we seen this kind of a pace.
Agree.
To extract value out of it, you need to know what your business is. Right. the Indian IT services companies have built such a fantastic relationship with their clients over the last, 30, 40 years. They know a lot about their customers' business. A lot. More than many people imagine. It's a fantastic opportunity for them to be able to tell their customers that this whole notion of time and money and hours is going to change into the value. Right? It has in many organizations already, but it's going to change into the value. And it's not just it's a different billing mechanism. People confuse this as, this is a different billing mechanism. Instead of doing time and money and counting people, you're going to outcome-based pricing and all of that stuff. Yeah, but it's more than that, right? If I'm able to sit with a man, yesterday afternoon, I was happened to be at an event where I met the CEO of a listed company. It's a manufacturing enterprise, 1,000, 2,000 odd crores revenue, Bangalore-based. Just, casual conversation. And, he kind of said, very traditional, hardcore manufacturing guys, right? And he said, at a minimum, I think I'm going to be able to save 10 crores. I just need to get my teams around it to work on it.
Using technology.
Using AI.
Yeah.
Manufacturing guy. Hardcore manufacturing. This is proper metals and forgings and all of that stuff, right? I mean, just yesterday afternoon. I see literally a sea of possibilities. No pun intended from Sea Fund, but sea of possibilities for the services companies. There'll be some disruption, right? Every tech transition, you'll see some disruption, right? I was telling my son over the weekend that when I graduated, this was public information, IBM had probably in those 12 to 15 months or so when I was in college and graduating out of Arizona State, had let go of over 100 to 150,000 people or somewhere in that range, or I may be off by my numbers a little bit, but somewhere in that range of people, right? And as a student, when you're worried, as a grad student, you look at all this stuff, like, Jesus, what am I doing, right? What is this industry happening? What's going on, right? 30 years later, IBM's still there. They're thriving. They're doing okay. They're serving their customers pretty well. It's a tech industry, as one famous CEO said, does not respect tradition.
Yeah.
Right? Satya said this. The technology industry does not respect tradition or heritage. I may be misquoting him. It only respects innovation. Right? So the pace of innovation will have, challenges on the way where you're going to do reskilling, rehiring, etc. But to bring it back to your point about the services industry, yes, there may be some short-term pain, but it's a fantastic opportunity for three reasons. One is they've got the talent. They just need to upskill the talent to use AI. They've got customer access. Right? Now they need to be able to convert that access knowledge into business value for them. And they've got pretty good governance. Right? So all these are publicly listed companies. Some of them are listed overseas. They're very well governed companies.
Yeah.
Right? In terms of GRC and respect for customer data and customer relationships and all of that stuff, right? It's a very good mix, I think, for that $200-250 billion odd industry to become a $1 trillion industry, services industry out of India.
And you think that the articulation as it relates to IT services also points to an edge that India has overall in the AI world?
Can be an edge. We have to invest in it. It's not going to walk up to you and say, listen, I'm, a lot of reskilling, a lot of mindset changes, a lot of customer convincing, a lot of proof points. It's a lot of hard work.
Yeah.
But there is sort of, money to be made. Just to go back one more thought, right? You talked about capital earlier. Right? We talked about capital, and I'll let you get to your next question. And I give you many examples of government funding and, state governments and fund of funds and SIDBI and all of that stuff, right? The one element I kind of forgot to mention is that the VC ecosystem, of course, has grown quite a bit over the last 4 to 5 years. When I was with Intel and when we were with Intel, we'd started investing, from India. And I remember Shiva taking me and telling me, go meet Rediff, go meet, Sasken and Persistent, and very early stages of investing. That was a very different world, right? Today, you've got a very vibrant multi-stage ecosystem to invest. Now, the point I was trying to make is the money coming into many of these pools of capital, a lot of it is local, right? That money is coming out of family offices, that money is coming out of professionals like you and others who've been in the industry, done reasonably well for themselves, feel like they want to get connected back to the tech industry
and give back in some shape.
And not charity. They're doing investing. They're doing investing, and they know the merits and demerits of long-term capital investing. And that segment of the population, actually two segments. One is the professionals, and the second is just various families who've been in traditional businesses, saying we're pretty okay on our balance sheet. What if we set aside 1%, 2% of our investment strategy into something more long-term? Could be strategic to them, could be adjacent to their businesses, or could be completely a financial investment. That's a pretty big change. For a Marwadi, for me to go and tell somebody in the family, give me 3 crores of rupees, I won't give you interest. There's no dividend which will show up every quarter or every 2 quarters or 3 quarters.
I will invest in high-risk ventures.
We'll invest in high-risk ventures, and we'll call you back 7 years or 5, 6 years later and tell you how good we're doing. Of course, we'll send you quarterly reports. The evidence in this is the amount of capital which has come in from the family offices is very healthy, which means even that segment of the population is coming and looking at these long-term. So, to your point about capital, I think the scenario has changed. There's a lot of capital at various stages available in India. Is it enough?
Yeah.
No, we can always have more. Right? I would argue we need another 5x, 10x of this. We probably need 5 1 lakh crore schemes in India to be able to go fund deep research.
Right.
But we have a great start with ANRF, great start with RDIF. So there's capital.
So one part I wanted to explore with you, and you have had a vantage point as a VC, and you've done a little bit of investing even at Intel, is founder mindset, founder personality. And especially in areas like deep tech, every company that has been successful has had founders that are unique in more ways than one. So what patterns have you seen? What distinguishes successful or promising deep tech founders?
Actually, it's relatively simple set of things. One is, the founder should have a belief in the market, of what market they're selling into. Sometimes that belief is misplaced, but you have to, and which is where we verify whether that belief has a certain size and all of that stuff. They should really, we're not going to understand all markets. Right? We don't have the ability, no matter how many analysts we hire, no matter how many AI agents we have working for us. We'll do research, but ultimately we're going to have to see the conviction of the founder to say, yes, the market is there. Traits, given that we work in the deep tech industry and invest, we usually look for a very strong CTO if the founder is not a very techie business guy. Right. So combination works well. So having to invest in deep tech companies, that trait is critical. And it's not the degree or the school they came in from. It's the kind of work they have done. Right. It could be a college project, doesn't matter. Right. But the kind of work they may have done, which demonstrates their ability to build tech products, right, or tech thing. It's very useful, very, very useful if they're able to communicate and get an emotional response in the minds of either an investor or a customer of why what they're building is valuable to them.
Yeah.
Because a founder is always selling, either to customers or to investors.
Agree. And you think
And to
in
the employees. So
everyone internally as well. When you think about a world that you painted, right, the foundations are shifting on a much faster cadence. It's hard to judge which segments will win or which areas could be promising. And founders are operating in that environment. So are there any traits you think matter more now than ever before?
more than before. Pace,
Of execution?
that sense of urgency.
Yeah.
Right? If that founders don't have, I mean, it was always important, don't get me wrong. But then now, if you're especially in this kind of space, the sense of urgency that I better get to a solution or something which is valuable to the customer very quickly, rather than wait for perfection and then be able to, of course, convince, is going to be important. Or they're so differentiated that 3 months here and there or 6 months here and there
Does not make much of a difference.
does not make much of a difference. So we end up not because we want to have that slack, but we end up investing in companies which have a little bit longer lead cycle in terms of market to catch up. If you see our portfolio companies and the times in which we've invested, many of them are probably even ahead of the revenue cycle from a market perspective. Not their revenue, but from a market perspective. And then you catch up in the revenue cycle. The semiconductor investment, I mean, the market is just growing. The space tech investment we made, almost a year plus now, was very small market at that point, visible market at that point. But again, we saw the potential, and then now it is sort of catching up. So
Yeah, I couldn't agree more on the pace because the tools are improving at a cadence, and the tools are literally interns for you. Yeah, highest caliber employee at your beck and call.
Yeah.
And execution becomes cheaper and faster. So you ought to build pace on top of these tools.
Yeah.
Agree.
I mean, these code engines are sitting 24 hours and writing code for you.
Yeah.
And many of them.
There's no limiter.
Right. You have a bunch of guys writing the code, and you have a bunch of other engines taking this guy's code, and a third set of guys doing, testing the code. Right. And no humans involved if necessary. And you can do it on agentic stuff. So we.
So bringing it all together, if you were to synthesize answer to the question that what must hold true for AI-driven deep tech companies in India to be successful at scale, how would you answer that?
Be clear on what problem you're going to go solve. And I answer this not necessarily with a VC lens, but it could be just as a business, right? You got to pick what you want to go solve. Whose problems are you going to go fix, right? Are you going to help a financial industry guy be more compliant with, let's say, the local laws, right? You could be building a solution just to do that. We have a company called Consent.ai, right? They are primarily looking at healthcare records, healthcare claims, and use a lot of forensics to check if there is, any form of fraud in it.
Okay.
Right? Use AI, deeply, use forensics deeply, and they just go deep into that. Small set of customers, but still large potential. The number of people insured in India on the health
Very
side
small.
So it's only going to grow. Hence, the number of claims are going to grow. And hence, if they stay. So you could stay in a relatively narrow space, build enough capability, and continue to grow with that because the market is growing in that space. So if you can understand the problem of the customer, build a solution which is reasonably, meeting their needs, you can grow with your customer.
Yeah. Fair point. So we have coming to the end of the show, Narendra, and I have one question that I ask all my guests, that India's foray into technologies like AI or semiconductors or deep tech is much more than domestic growth. It's about our place, India's place in global technology landscape. So if you fast forward 10, 15 years, from your vantage point, where does India sit And what do you believe are 2 or 3 areas what we can do or actions we can take right now to make that a reality?
See, we've always held the belief that tech is an enabler to a business problem or a life problem or a navigation problem which you're going through, right? It gets you from point A to point B. Tech is an enabler. But the core reason is your problem of getting from point A to point B. So tech is applied to many industries. So I've had this thought quite a bit over last, I would say, a decade or so, where we look at this macroeconomically and say, for us to become the Viksit Bharat vision, which was painted, a few years ago, we want to become several $1 trillion economy. So we said, okay, chalo, what are the industries which create that kind of value? I picked a number, could be wrong, could be right, which is, let's take $100 billion, right? What are industries which create $100 billion of value to the local ecosystem? So I know you ask global also, but we'll bring the global aspect into it. I was just looking at the IT sector, right? Just how from some policy changes a few secretaries made way long ago, today it's like a $250-300 billion export industry, which earns, reasonable amount of cash for the country and provides a lot of employment, right? And it's created a whole ecosystem. I look at the automotive industry, right? I still remember my younger grandfather telling me after bringing home the new Maruti, the first Maruti home, it's like, I'm not going to drive it, but why don't you drive it? And after driving diesel ambassadors, when you drove that, my God, this is like the sports car we've been watching in the movies, right? It was like a red Maruti 800cc little engine, but it felt like a sports car to many of us, right? Those automotive, with Ford and Hyundai, and all the others sort of coming in, and of course Maruti becoming out, right? You've created several $100 billion of value over the last, 2-3 decades. And you start to think of these large industries, right? So I would, from a painting the vision or painting the future perspective, look at 5 or 6 areas, each of them potentially $100 billion opportunity for the country, and just go after that. So tech is a component of that industry, right? Tech is a strong component of automotive today, right? People argue there's more value of silicon and code in a car than the value of steel, right? Yeah. It's often quoted phrase. I don't know if it's completely true, but there's very high value of software and silicon in it. Today in India, cell phones are part of our lives. Everybody, no matter what section of society you are in. It's a multi-billion-dollar sort of industry in the ecosystem around it, right? That could be $100+ billion industry from here, on top of what we have over the next several years. Ecosystem around it, software, hardware, sensors, all kinds of stuff. Manufacturing, glass, displays, everything. The whole electronics sector, right from chips to assembly to test to packaging to the actual products, is probably $500 billion industry over the next several years.
The entire supply chain.
Entire supply chain, right? We just need to get to it. There's no, I kind of believe that there's no choice in this now. You just have to make it happen, right? And I'm sure there are a few in biosciences, health, right? Care and, drug discovery. If you just look at these 3-4 elements, right? That's like $100-200 billion industry. And I'm talking of all of these numbers as incremental from where we are today. Mm-hmm. tech can enable many of these, if not all of these. So the way I look at this is, look at 4 or 5 or $700 billion plus industry sizes, of which electronics has become one of them, which can power the others, and that means that needs to move faster. But what sometimes I feel is missing, this phenomenal amount of effort from various forms of government and in terms of capability, funding, painting, sectors, mission modes, all of that stuff. I still feel our research ecosystem has not caught up to what the requirements of these sectors are, right? You've been on both sides of the ocean enough. You've seen enough of Southeast Asia. We've got thousands and thousands of engineers and graduates like us who moved back and forth and stuff. Somehow we've not been able to, we've brought ideas, we've brought capital, we've brought management style, all of that stuff, but somehow our research ecosystem has not gotten the DNA of that sort of industry, academia, deep research, 3-year research, 5-year research, 20-year research. And this is, you can't blame this on the government. Right? There's enough institutions of repute. There's enough capital being given to enough of these institutions. There's enough tinkering stuff which has been given. I think it's a collective mindset of our youth and the professors, their teachers, if you will, where it's been said many times, but this whole notion of experimentation, rewarding or allowing people to try again and again. Sort of, I don't like the term failure, right? Just try and try and try, tinker. Teach our next generation of students to just build stuff. Doesn't matter what you build, just build stuff. Just that mindset to, could be software, could be a better plastic bucket, could be
anything.
A tap which can never leak. Just silly stuff, right? But just build stuff, right, in your discipline. And I think we'll see some dramatic changes. We're lacking in that.
Yeah.
We're definitely lacking in that.
It's a great summary. So we have explored different rabbit holes. And are there anything or any areas that you wanted to touch on that we didn't cover?
I think it's a great time to build. I'll say it again, I just said it, but it's a great time to build for our youth. Is not necessarily the word anybody, right? I mean, today a programmer is a 75-year-old who can type in English.
Agree.
Right? So it's a fantastic time to build capital, market, geopolitics, good governance, good leadership across. Or catchy. Go get things done, right? I mean, I don't think we've seen as good times. Just genuinely from a business perspective, when you sit down and place the pieces. Are there problems or there are 100 problems? Right? We step out on the street, there's a problem. That's a separate discussion, but there's so much opportunity to build. Yeah. So I would just encourage, go build stuff, man.
Yeah. Excellent place to close. Thank you, Narendra. This was fun.
Great. Thank you.
For our audience, thank you for being on Chai and Chips. We are available on YouTube, Apple Podcasts, and Spotify. Please subscribe to our channel and leave a review. If you like an episode, please share with your family and friends as it helps us get the word out. With that, see you next time.